0.92%, while the nation's revenue is projected to increase to over 9 trillion naira by 2023. From the presidential villa, Gloria Umezuke, Channels Television News.
Well, one issue that has continued to dominate the global space has been concerns over climate change. While the world has been moving rapidly towards clean and renewable energy, there are concerns as to what the implications will be on fossil fuel-dependent countries. The Managing Director, Codros Assets Management, Bolaho Aino, joins us now to weigh into this. Good morning, Bolaho. Thank you very much for joining us. Well, Bolaho, recently, OPEC Secretary General Mohammed Bakindo cautioned against the discontinuation of investment in the oil industry and reiterated that oil and gas have an important role to play in the energy transition. What do you make of this statement?
Okay, so I think it's quite a valid statement, to be quite honest. And really what he said was that really it's not really against net zero emission, but he feels that really not throwing the baby away with bad water. And while we are all pushing for net zero emission, while we're pushing for cleaner energy, he's saying that you shouldn't just ignore development in the oil sector. And that's quite understandable because of the importance that oil has in major economies around the world. Nigeria, for instance, we know that oil really accounts for 80% of our revenue, and Nigeria is not really let alone in this boat. So his point is quite noted, and I think for me the salient point is for Nigeria as a country, we need to start thinking of how do we diversify our energy base. And most economies around the world, they are saying by 2050, which is about 30 years from now, we want to achieve a net zero emission. And that means they are moving from fossil fuel to other alternatives. And it just go without saying that we need to prepare for this. For most disruptions, most times people are not aware. Sometimes you see a viable institution, a viable country is no longer viable when you have disruption. But this disruption is quite known. Most countries are planning towards it. And I think Nigeria also needs to start having a plan towards diversifying our energy base. So not totally just shifting away from oil, but also trying to just focus on other alternatives, other innovative ways to reduce carbon emission and to ensure that we can have clean energy and also good production. So I think it's quite apt what he said, and I really want to toe the line of what he said. I think he said something significant as well, that that's just looking away from oil can have significant impact, especially for the underdeveloped nation. Most of the developed nations guided to 2050, but most of them said that by 2050 they might not be able to achieve that net zero emission. And he's saying for the underdeveloped nation, which Nigeria also can fall in place, we just need to strategically just position ourselves. So I think what he said is quite apt and quite valid.
All right, Bola, please just look into your crystal ball and tell me, where do you see this industry in another 30 years?
Okay, 30 years is really a long time from today. And really the energy industry or the oil and gas industry has gone through a lot of transition. I think in 30 years' time, there's going to be a lot of significant change in composition in terms of carbon, in terms of population, in terms of economic growth. I think demand is going to flatten a lot and then reduce, mainly due to efficiencies in the use of energy after 2030. Most people have really proposed that by 2033, we're going to see gas begin to have a leading role. So a lot of things are going to change. I think it's going to really flatten, and that's why I said that Nigeria needs to begin to position in ourselves for this change. I think key areas of demand for fossil fuel will be for heavy transportation and air and shipping. And like I did say, gas is projected to become the largest energy carrier from 2033. In terms of the oil composition, I think hydrocarbon is just probably going to have just about 30% going forward. And very important, well, I don't have a crystal ball, but if the events of the past are anything to go by, I think there's going to be a shift in focus from fossil fuel or from hydrocarbon more to gas.
Yeah. Well, you say you don't have a crystal ball, but then bring it down to Nigeria, which relies so much on oil for its revenue. Where is the risk off and risk on?
Okay. And if we go back to what the OPEC Secretary General said, countries trying to achieve net zero emission. And I think for Nigeria as a country, we need to really position ourselves. That means come 30 years from today, most countries, developed ones, are going to shift away from fossil fuel. And Nigeria, at the moment, we are heavily dependent on fossil fuel for our revenue. Also in terms of our energy production, is majorly fossil fuel. So I think we just need to begin to position ourselves, if we want to remain that oil giant that we are, or that giant of Africa that we are, we need to really position ourselves and diversify our energy base and not just solely rely on fossil fuel. We need to look for alternative ways or better ways of generating energy, clean energy, that's not going to cause emission, because that's where the world is moving to. I want to be prepared as a nation. And it's quite instructive because Nigeria, our revenue is really linked to oil receipts. When oil is good, Nigeria is fine. When oil is good, our external reserve is fine. And we saw what happened last year when we had the COVID-19 pandemic, with oil coming to the record lows. That really affected our revenue. And just imagine if we don't have oil anymore. So we need to begin to prepare for this. And I think it's a major risk factor. And I believe the economic watchers are putting up structures to ensure that this disruption doesn't affect us as a nation.
Yeah, and a couple of countries have a life after oil fund. How's Nigeria doing on that front?
Well, not so much I've been heard about that. Like I said, we are so much heavily dependent on oil. And I think we just consciously need to begin to look away from oil. Yes, oil has been good for us. We had the oil boom. It's revolutionized us as a country. But really, the world is shifting away from oil. And I think that needs to be the message that needs to sink in. If there was anything that the Secretary General said, which was what I got from the message, is that come 30 years from today, most countries are not going to be dependent on oil anymore. And I think as a nation, we just need to take those messages very serious and just begin to prepare ourselves for that disruption. It's an inevitable disruption. For most disruption, really, you're not prepared for it. But this one is as if you are really for one. And since everybody expects it to come, I think we just need to begin to prepare for it. And we are not disadvantaged.
Now, since the beginning of the year to date, Nigeria's financial market has been quite volatile. The fixed income instrument yields rising significantly from 2020 lows and are currently around their peak levels. And recently, the equities market has started to see buying interest from investors, while Eurobond yields are also attractive at their current level. Are there some linkages to what is happening in the global oil market?
Yes, I quite believe so. And most investors always appraise the risk on Nigeria in terms of oil. If oil is good, for instance, the risk in Nigeria is muted. And because, like I just said, about 80% of our revenue comes from oil. In terms of accretion to reserve as well, it grows significantly when oil prices is trading at significant high level. So now oil is about $3 per barrel. That is good for Nigeria. We're able to earn additional revenue to our reserve. And that also affects in terms of what we can do from a budget perspective. And you know, the way people look at the equity market is usually like a barometer for the economy. So if we have good results, if we have good macro story, most people want to invest in the equity markets. And we've seen some people begin to come back to the equity markets. Also, what that does in the fixed income space as well is that if the reserves are quite stable, you don't expect to see a lot of FPIs leaving the country. So we expect to see significant inflow in the equity market from the FPIs and also in the fixed income market as well. So really, there's a significant linkage, like you said, if I'm to answer your question, between oil price and the equity market and the fixed income market. Most investors always appraise Nigeria in terms of oil, and it's because oil accounts for most of our revenue.
And do you think this is a good time, for investing in these markets? And, how should investors optimize their returns in 2021?
Okay, I believe it's always a good time to invest every time. Really, the question is, do I invest or I don't invest? So investment is always a good thing to do. The question is, what do I invest or how do I invest? And I think there are significant opportunities. Like you said, we began to see some rally in the equity market. I believe a lot of investors are going to start positioning for Q2 dividend. So for stocks that have good fundamentals that we expect to get interim dividend in Q2, that might be somewhere investors can pick their tent. Also for the fixed income asset class, for instance, we feel that yields have peaked or have reached an inflection point. Over the past couple of weeks, we've seen yields begin to reduce. So for investors thinking about capital preservation, you might begin to lengthen your duration. And that means you are going at the long end of the curve in your money markets or your treasury bills or your bond instrument, because we expect yields to have peaked. So like I said, it's always a good time to invest. And the question is really, what do I invest in? So for equity markets, look for stocks that are going to pay dividend. We expect some banking stocks to pay dividend in Q2. We're going to start seeing their results in July. Like fixed income instrument, we've seen a lot of commercial papers that have come out of recent time, and some of those commercial papers are strong double digits, some as high as 14%. And money market mutual fund as well is also a good alternative for investors that are looking at capital preservation. Yields on money market mutual funds from last year that was trading about 0 to 1% are moving towards 8, 9, 10% now. So really the opportunities for any sort of investment.
Well, it's just about looking for a good asset to invest in there, not necessarily buying the dip. Okay, recently, Codros released its half-year outlook report titled Navigating the Uneven Path of Recovery. And the report highlighted major economic issues amid the COVID-19 impact and the shortage of vaccines in the country. The report also gives a positive outlook for both the equities and fixed income market for the rest of the year. What factors do you think would shape the performance of both markets?
Okay. So really we've seen a lot of activities after the relaxation of lockdown, and that has caused some sort of the economy to be stimulated. We expect to see a lot of prospect for macroeconomic condition going forward. That's probably going to support earnings of the corporates that are listed on the exchange. And of course, better earnings also means better return for the investors. We expect possible returns of the FPIs into our markets. The FPIs, they've been net sellers of equities in the past, but if they come back to the markets, that's going to also spark activities in the equity market and the fixed income market. We had recently, yesterday, that the Senate approved the federal government borrowing plan, about 6.2 billion in euro bonds. That is probably going to help or show up our reserve as well. And that might give some FPIs some confidence that they need, and might see them come back to the market. I did mention that we expect some stock to pay interim dividend in Q2. For a lot of investors that like dividend, for instance, might see some of them begin to pay their tent in those equities, in those stocks. So dividend payments, we expect to spur activities. And we also expect some company-specific activities. GTB announced their holding structure. That might elicit some interest in GTB, for instance. Might possibly see a second buyback of Dangote share. They did a buyback last year. Might see the second tranche this year as well. So those are key activities that I think might spur activities in the equity markets. In the fixed income space, like I did mention, that we feel that yield has peaked, and for a lot of investors, we saw a bit of bullishness in the past couple of weeks, in the last 2-3 weeks to be precise. A lot of the PFAs are coming back into the markets because the fee yields have peaked, and that might also spur activities in the fixed income space as well. I think if the Eurobond issuance is successful, might see a lot of FPIs come into not just the equity market and the fixed income market as well. So all those activities we think will spur performance in the equity market and the fixed income markets going forward.
All right. Well, we'll keep tracking these markets. Thank you so much. We'll have to leave it there. Bola Aina is the Managing Director at Codros Asset Management. Thank you so much for your time.
Thank you for having me.
All right. Business Morning continues in a moment. Do stay with us.